we'll go through this kind of briefly, but I think it's a lot better to explain how to use the Ichimoku on a live chart, which we will do. We'll use BTC as our example, along with a couple of our other tools, obviously Steamroller being one of them. And I will kind of briefly touch on a little bit of my Ichimoku strategy. We do share how we trade alt setups on YouTube, which I really talk about Ichimoku and how I do that and find entries and exits using Ichi. But I'll briefly touch on that tonight. But let's get straight into this. Thank you very much for watching and being a part of this. If you do have questions, pop it in YouTube, come over to the Discord. Always happy to talk about Ichimoku. It's my absolute favorite tool beyond Fibonacci and Steamroller, of course. This is really my go-to. And I want to preface this by saying the feedback that we get a lot of time with Ichimoku is that it's just too noisy. It looks too convoluted. There's too much going on. It definitely can look like that. That's for sure. But the whole reason why the Ichimoku is so great, and when you look at it, is because it is really the one glance indicator. That's what it means. It means you can look at the market, look at a setup, look at a trade, look at the screen, and within 5-10 seconds know exactly where we're trending, where we're ranging, whether we're bullish, bearish, using Ichimoku. So while it might seem a little bit overwhelming, take the time, read this guide, unitytradinggroup.com/Ichimoku-clouds, and really familiarize yourself with this, because some of the best traders that I've ever spoken to, being Crypto Says and Zoran Cole, you can listen to the podcasts on the website. They swear by this. Zoran Cole, $1.5 million ETH trade using Ichimoku. Crypto Says is able to gauge, along with using Garn, months out using Ichimoku. So what does the Ichi indicator actually do? Well, it helps to define support and resistance levels. It gauges trend direction and gauges momentum. Of those three, the best thing that Ichimoku does is gives us an idea of direction, particularly, or trend, gives us an idea of trend, particularly on the 1 day. And we'll talk about timeframes and stuff in a moment. But if you really want to get an understanding of how an asset is trending, whether it be bullish or bearish, particularly on the 1 day, to give you an overall macro trend direction, the 1 day is great for that. And the Ichimoku is phenomenal for that. Yeah, I use phenomenal. Deal with it. It really is good. I use the word phenomenal. It's great for that. So as it says, it translates into one look equilibrium chart. And that's what this does. It gives us a glance at one little look. We can tell where the markets are going. So as I said here, it's worth noting that unlike other methods, the moving averages used by the Ichimoku strategy are not based on the closing of candles. Instead, the averages are calculated based on the high and low points recorded at a given period. So when I refer to the Tenkan and the Kijun being the base and conversion lines as moving averages, they're not traditional moving averages, but we kind of treat them as such. So let's have a look at the parts of the Ichimoku. Now, you can go ahead and learn the Japanese words if you would like to, but I've helped to break them down a little bit further here by calling them, let's call them the English name. So the Kijun, the Tenkan, the Chikou, and the Senku span A and B. Let's break it down here. The Tenkan being the blue line, the conversion line, the Kijun being the baseline, the Senku span A being the top or the green part of the cloud, Senku span B being the red part of the cloud, and then your Chikou span, which is your lag line. These are the parts of the Ichimoku indicator. So we'll refer to them as conversion and baseline. We don't need to be, don't need to look at this technical stuff here. You can read that in the guide. So what does each part tell us? Well, the Senku span A is depending on whether we're sort of bullish or bearish or which way the cloud is twisted, is used to measure momentum and can provide trade ideas based on support and resistance levels. So like the Tenkan San below, it's a fast sort of moving average. So it gives us a little bit more idea of shorter term direction. So we'll go, let's have a look at our chart here. So using Unimoku. Now, you'll notice there's a few different settings on Unimoku, and I'll run through these very briefly at the end of this, or I'll run through it a little bit at the end of this, but let's just talk about the parts of our indicator right now. So let's go and turn a few things off here. So let's just look at our Tenkan and our Kijun. Now, yours might look like this. Now, if you were to look at this, what do those red lines and those blue lines look like? Well, to me, they look like MACD lines, or the MACD and the signal line. And that's very much how they act. We've got our baseline, which would be our MACD line, if we're looking at the equivalent, being the let's call it the slower moving average. It's a slower line to react to market data because it's bringing in a little bit more data than our blue line, which is our conversion line, which is our signal line. Looks just like a MACD signal line. So the very basics of this is that we're looking at each of these as like a moving average or a MACD line or a signal line in terms of crosses. When we have our blue line cross up above our red line, our Tenkan above our Kijun, or our Kijun above our Tenkan, we're looking for bullish moves here, bullish sort of environments. We want this conversion line because it's giving us the more reactive data to cross up above the slower reacting line, which would be the MACD line. So we can see every time we've had what's called a TK cross, we've had this bullish sort of scenario, and then we get a cross below, we get sort of a bearish scenario, but we don't have this divergence between the conversion and baseline, which indicates us the strength of the trend. So here's an example up here. We had a bearish cross here, the blue line, the conversion crossed over the base, and we had a sort of a bearish engagement there. So what we're looking for is when we're trending above, let's say, these moving average lines, we're looking for each of these to act as levels of support. And this is what Zoran Cole spoke about when he was doing his $1 million ETH trade, where we had these significant dumps that were costing him $20, $30, $40, $50, $100,000. And because he was so well versed in Ichimoku, he was looking for this baseline support. And he got it many, many times. And you'll see that. And this is where you would maybe look to place sort of stink bids or bids below recent price action to see if we hold as a level of support. And conversely as well, when we are ranging below each of these or one of these, let's say, moving averages, we're looking for them as levels of resistance. So that's the most simplified way of explaining how your conversion and baseline works. Just like a moving average line, just like a MACD line, or maybe you might have one of our unicorn indicators where we've got our MA lines where our fast and our slow moving averages are crossing above each other. Each of them are acting as a level of resistance below, and they're acting as a level of support when price action is trending above them. And you can read all about MAs and everything on our website as well, but we won't get too into that. So that's the easiest way of understanding how our Tenkan and our Kijun, or our conversion and baseline, works. When we are ranging, you will notice the sort of the tightness between them where there's not much divergence. They're very close to one another, which sort of indicates a trending or a ranging market rather. And this is looking at the daily, mind you. So what I do when I'm looking at these, if I'm looking to get an idea of trend, I will start with the 1 day and I will make my way down the time frames to really the minimum of about the 4 hours because it becomes too noisy. So 4 hour, 12 hour, and daily I find are the best trend direction indicator time frames when using the Ichimoku indicator. So let's get back to our guide a little bit here. That's what each part tells us. That's our base and conversion line. Now let's have a look at, I guess, arguably the most famous part of the Ichimoku indicator, being our cloud A and cloud B. Let's just call it that. Again, they act very similarly to each of these in the sense that they're kind of like moving averages because one is faster reacting than the other. We'll get to the Chikou in just a moment as well. So we've got our Senku span A and we've got our Senku span B. Our Senku span A is the green and our B is the red. And each part, as I said, the green line being the Senku span A, let's just call it the A line, is the line of the Kumo used to measure momentum and can provide trade ideas based on support and resistance levels. So like the Tenkan San that I explained a moment ago, which is the blue line, it's let's call it a faster moving average. So it gives us a little bit more idea of shorter term trend direction. And you can see the similarities now between your base and conversion lines and your span A and span Bs. The red is giving us slower reacting data. It's a longer term moving average, if you want to call it that. It's not a moving average, but let's just call it that for simplicity's sake. And the A is giving us a little bit more reactive short-term data. And you can see just how in the past, like our base and conversion lines acting as levels of resistance when we are below the cloud. When we are above the cloud, they're also acting as levels of support, resistance, support, very strong support there. Resistance. So you can see how similarly the red lines of the Ichimoku, whether it be your baseline or your span B, are sharing the same relationship in the sense that they're slower or quicker moving, sort of average-esque parts of the Ichimoku. So there we go. So that's span A and span B, and that's really how we use the base conversion span A and span B. It's just the slower sort of moving average, and what these do is they form what's called the Kumo cloud. That's the cloud that you see here in front of us, and the green and the red is just the filler. That helps us to give a better idea of when we see a green cloud, we're expecting green. Green is for go, red is for stop. When we see green, we're expecting some sort of bullish environment, particularly when we get what's called a Kumo twist, which we'll get into in a moment. So if we put all these parts on here, and we'll get to the Chikou in just a moment, we can look at that now and say if we only had this sort of data here, we would go, all right, this is some sort of bullish environment. This is we're expecting some sort of bullish sort of upcoming moves. Here's a very good example of that, a bullish momentum. So when we see red clouds and price action below the cloud, we're expecting that to act as a level of resistance. When we're above the cloud, we expect to use the cloud as a level of support. When we've got a red cloud, we're experiencing bearish conditions. When we've got a green cloud, that's experiencing more so bullish sort of conditions. So let's have a look now at the Chikou span. To be honest, I don't put a ton of weight on the Chikou or the lag line. I'll explain why in just a second. So our lag line is just that. It's really a lagging sort of indicator. And the only reason I really put a lot of weight on the Chikou is where it is in relation to the cloud. So the lag span is designed to allow us to sort of visualize the relationship between the current and prior trends, as well as spot potential trend reversals. So the trend is deemed upward if the Chikou span appears to be above the price action, and downward when the indicator appears below the price. So a lot of traders will look for the Chikou or the lagging span to cross with prior prices to signal a potential trend change. And what do I mean by that? Well, we'll get into that in just a second, but if we put everything on here, where I'm looking at really putting a lot of weight on the Chikou is where it is in relation to the cloud when we have broken outside of the cloud. If the Chikou is also breached and price action is above the cloud, that's a very bullish scenario. If we've broken back down through the clouds and the Chikou is also back out down below the clouds, then that's a pretty bearish sort of argument. So that's where I look for it. If the Chikou is ranging above the cloud, then I'm expecting a nice continuation of bullish price action. If we have broken back down through the cloud in a negative way like this, and a bullish break below the cloud, that's where I put a lot of attention on that in terms of a bearish sort of continuation. I don't really look for it in terms of resistance or support, depending on where it is. What I will do sometimes is very similar to what I'll do on a line chart, where you would go ahead and line up levels to sort of reduce noise in this sort of way. I will do the same thing with the Chikou, and that's really the only time that I would use the Chikou in any sort of TA sort of way, if you will. And I'll turn everything off and I'll show you what I mean by that. I really would only go ahead and use the Chikou in this sort of manner where I'm looking to connect points of previous highs or previous lows, similar to what I do with a line chart. And I don't do that so much anymore, to be honest with you. So really the only time I'm looking for it is, as I'll show you in a moment, when I'm looking for a trade setup using Ichimoku. So I'll turn this off. And I'll talk about edge to edge and some trade setups for you in just a second. So that's Senku Span A, Senku Span B. Again, you can read all this on the guide, and we also have a video down the bottom where I explain this in a little bit more of a structured manner, I suppose you will. I'm kind of ad-libbing a little bit tonight and just adding in certain things that I wish I maybe would have said in that video as well. So let's just quickly refresh this a little bit. Tenkan Kijun base conversion lines, red and blue. Treat these red and blue lines like a MACD. When we see a bullish MACD cross or a bullish TK cross, we're looking for bullish conditions. Blue above red, bullish. Blue below red, bearish. When we're trending above the blue and the red, look for each of them to act as levels of support. When we are trending below both the base and conversion lines, look for each of them to act as levels of resistance. When one is broken, look to the next as a level of support. That's the easiest way to really say it. The Kumo, when we've got a red Kumo, any type of price action below a red Kumo, look for your span A to be acting as a level of resistance. The next level of resistance, if we break confidently in the cloud, is span B. Look for that to be a level of resistance. When we are trending above the cloud, look for the cloud to act as a level of support. Your span A becomes support. We break below that, look for span B to be support. Green cloud means good. Red cloud means bad, depending on where you are trading in relation to it. I could have just said that to start off with. That probably would have been the easiest way to do it. So Chikou, and I've outlined how I use the Chikou in terms of what I just showed you a moment ago there as well. The cloud. So let's look at some Ichimoku trading strategies. This is the bread and butter. This is the real fun part of trading with Ichimoku. This is the money maker. So as I've said here as a note, you want to create a narrative like what crypto said. Start at the 1 day. What is the Ichimoku telling us? Can we then go and find the same narrative on the 4-hour chart or the 12-hour chart? Is the 1 day telling us that we're bullish? Is the 12-hour telling us that we're bullish? Is the 4-hour telling us that we are bullish? If all three of those timeframes are giving us the confirmation, then that's a very strong indication that the trend is either bullish or bearish, depending on whether each of those is telling you. Each of those timeframes is telling you. So one thing that we would also say to a lot of people, and if you're watching this, is don't neglect the basics of TA when trading with Ichimoku. Just because Ichimoku gives us trend or it gives us bullish or bearish crosses, we don't throw the rest of our TA out the window. So we still draw our lines of support and resistance, or our levels of supply and demand if you trade with us and how we trade. We still use our Fibonacci if we want to use it in that sort of way to find dynamic levels of support and resistance. We still draw our diagonals. We may still use our moving averages or whatever it is that you might like to use. I'm an indicator fiend because we have our own indicators and they work so well, so I use them in conjunction with Ichimoku, but don't throw everything else out the window just because Ichi is telling you what you sort of want to see or confirm your own sort of bias. So draw your lines of support and resistance first and trend lines, and then overlay the Ichimoku to see if things will line up. And that'll give you a little bit more confidence about confirming a bias on whether you believe we are bullish or bearish. So let's look at the juice now. These are some of the most popular Ichimoku trading strategies. So the first one is called a TK cross. This is just like a MACD cross that we spoke about before. So the base and conversion line signal occurs when the baseline or your conversion line crosses your baseline. When your red line crosses your blue line upwards, as we said, that's a sort of a bullish, that's what's called a bullish TK cross. And similarly, a bearish TK cross occurs at the other side of that. When the blue line crosses over the red line, that's a bearish TK cross. And TK stands for Tenkan Kijun cross. So let's have a look at this in real time. Let's go and have a look at the charts. And you'll see below here, I've got Steamroller. I never trade anything without Steamroller. So let's have a look on the 1-day charts and get rid of some noise. Actually, you know what? We'll keep everything here. So let's have a look at a bullish TK cross. And if you've got eagle eyes there, you could spot that very, very easily. So here we are here. This is a bullish TK cross. This is when our signal line, if you will, has crossed up above our conversion line. Our faster moving average is crossing up above our slower moving average. And that's what's called a TK cross. Similarly, a bearish TK cross, but it's not a very strong bearish TK cross. I'll explain that why in just a moment. And there's a very strong bearish TK cross. We had a couple there, but this was the kicker. And one thing I really, really love about our Ichimoku indicator is that this tells us this in real time. We can set alerts to this if we wanted to. TK cross, bang. So we get an indicator there. We get a signal which we can, as I said, set alerts for when we get a TK cross. So if we get a bearish TK cross, we can set an alert for that that fires and it pings through TradingView. You can get a message, you can get an email, you can get a pop-up on your phone, on your device, whatever it is, telling you that this TK cross has occurred. So we had a very beautiful, beautiful TK cross here. And I guess the strength of the validity of the TK cross can be confirmed a little bit more. If you are a patient trader, you may wait for the next candle close to take effect and see whether the angle of your base and conversion lines has started to trend upwards. If you're seeing a TK cross sort of in this zone, and things are a little bit sort of flat, then yeah, you might pay attention for a short-term trade. But if you're on the daily, you might wait for the next daily candle. You might see a bullish engulfing candle like this, and then the angle of your Tenkan and your base and conversion line starts to trend upwards, and then you really know that that we're off to the races here. And this is where you would certainly be looking at a confirmation of an entry here, dependent on just that one factor alone. So that's a TK cross, bearish TK cross, bullish TK cross. Now, Kumo breakouts. This is a really, really powerful trading strategy, and one where, again, as I said beforehand, this is where we start putting weight on our Chikou. I'm just going to change the Chikou to yellow so it's a little bit easier to follow. Okay, so a Kumo breakout is just that. We're looking for bullish or bearish Kumo breakouts. And what does that mean? Well, it means a breakout above or a breakdown below the cloud. So this is, of course, a bullish Kumo breakout. This is a bearish Kumo breakout. We know that when we are trending or ranging above the cloud, that's a very bullish environment, depending on one factor. If we had a bullish Kumo breakout here, but our lag line was still down here inside the cloud, I would pretty much all but dismiss this as being a weak entry confirmation, particularly when we've got our friend Steamroller here telling us that we are entering into very overbought conditions and a breakdown is likely. And of course, Steamroller was bang on here. And that's why I use Steamroller and Ichimoku in unison with one another, because they beautifully complement one another, particularly when you're looking for entries or exits. So what do I mean by this when it comes to the Chikou? So let's look for a little bit of here we go. Here's a perfect example. We've got a bullish, this candle here would alarm you with that wick, of course, if you were just trading on candle structure alone. But here we've had a bullish breakout, I guess, here, and you would see this candle body would be all the way up here. You'd be getting very, very excited about that. But for me, if I saw this here, and I saw this lag line still, as it says, as the name sort of suggests, lagging back here. We don't necessarily have a breakout above the cloud or anything that sort of indicates that we are in a bullish territory, I would ignore that. So a very, very strong bullish confirmation for me is that if we have a breakout above the cloud and our Chikou has broken out through the cloud as well, that's the really the best trend breakout indication that Ichimoku can give you. And we'll find an example back here. This is not a great example, but it certainly validates what I'm saying here. So this is perfect. So we had a bullish breakout. Our Chikou had broken out as well. We came back down, retested the cloud, but our Chikou was still ranging very healthily above the cloud. So that's 2 out of 3 confirmations that we're in a bullish territory. So what would be the first one? Well, we've had this gorgeous TK cross below the cloud tick. That's potential entry confirmation 1. Although we don't have a fat cloud here, we still have a cloud nonetheless. So we've got a bullish TK cross. We've got Chikou breaking above the cloud, and we've then got price action breaking above the cloud here. Yes, we're sort of trending sideways a little bit here on the daily, but as you can see here, the angle of our basing conversion has really started to rocket up from here, and everything is ranging above the cloud. Our baseline, our conversion line, we've got a green Kumo twist here. We've got a green cloud. Our Chikou is broken above the cloud. There is nothing more that could be said from the Ichimoku screaming at you, saying that we are in a really, really bullish territory right here. So this is where maybe you would look to consider an entry. And that was a monstrous run. Obviously, this is a little bit outside of the norm, but the Ichimoku told us there that was occurring. And I'm going to go through the settings in a moment, which are really, really important to understand. There are 4 different settings on Ichimoku, and I'll explain how to use each of them in just a moment. Really, just 2 of them are the main ones. So Kumo breakout. So that is a Kumo breakout. Let's talk about Kumo twists quickly as well. They're pretty self-explanatory. The Kumo being cloud. Let's call them a cloud twist. When we have a cloud twist, when we go from red to green, that's a good bullish sort of indication of trend. I don't put all my weight on just the twist alone, and that's why it's really important to use all of these elements of Ichimoku as one. We don't just rely on a TK cross. We don't just rely on a Kumo breakout or a Kumo twist. We look for all of these to build that narrative, and for all 4 parts to say, yes, we are bullish, yes, we are bearish, or no, we are simply just trending at the moment. So let's find an example of this. That was a pretty good example here. Let's say where we had this little recovery here, and whilst we did have a breakout through the cloud, we also had our Chikou breakout through the cloud. So had you have just ignored all of that and were simply paying attention to this, sure, you may have entered. Steamroller was saying we were bearish at this point, so you certainly wouldn't discount that. But all of that, we've got 3 parts saying, yes, we are bullish. We've got a bullish TK cross. We've got a Kumo breakout. Our Chikou at the time was ranging above the cloud, which is this area here. But our Kumo was saying to us, no way, we're bearish here. We don't need to be getting too excited about this, because this level is expected to be a bearish sort of scenario. And while we did trend sideways for a little bit, and our Kumo was acting as a significant level of resistance, it indicates a lot of weakness. When we consistently retest the bottom of the Kumo and it acts as such a heavy level of resistance, I'm very, very cautious about being in any sort of longs until I get a confirmation or some sort of indication that we may be in a bullish environment. I'm much more looking for these nice big fat green clouds than what I am these narrow little green or red clouds to give me an indication, particularly when you are looking at the angle again of the Kumo. Are our span A and span B lagging upwards, or are they starting to lag downwards, indicating bearish momentum or bearish sort of trend that is occurring? So you can read a little bit more about how we look at clouds, because I feel like I'm I'm blurting out a lot of information here, and I don't want to turn you off Ichimoku. Read the guide, watch the videos, and explore this for yourself. But I really wanted to just reshare this again with you tonight. So that's the parts of the trading strategy, and we'll put all this together in just a minute. Kumo twists. So these tell you about the basics of the Kumo twist, and we've broken this down for you really well. When your green is above your red, Senku span A is above red, bullish. When the red is on top, bearish. Pretty basic stuff. All right, let's look at edge-to-edge trades. These are so good. These are so good because they are often very predictable in a lot of environments. So let's have a look at, yeah, beautiful. Okay, here we go. So let's have a look at an edge-to-edge trade. And again, and just to show you very quickly, Kumo twists are indicated also on this indicator here. So that usually comes, I think it's about 5 or 6 days out when we get a signal. No, that can't be right. Maybe it's on the 4 hour that I'm thinking. Yeah, there we go. So on the 4 hour, we usually get about a 4-day notice of any type of twist occurring when it comes out, and it obviously spits out that too. And you can set the indicator alert for that. When you get a bearish Kumo or bullish Kumo twist, Unimoku will fire an alert off to you as well. As I said, you can get it to show on the app, pop up, email. I think you can even send an SMS or something like that as well, with some tweaking as well. So edge-to-edge trades. Let's have a look at an edge-to-edge trade. And this is the beauty of what Zoran Cole was talking about. He had this gorgeous edge-to-edge trade that played out for him, made him $1 million, as you do. And of course, on this as well, we have an edge-to-edge indicator as well, being these yellow dots here that indicate an edge-to-edge trade. So like we've indicated here in the, did I talk about it up here? Yeah, not quite. So in this one here, we talk about edge-to-edge trades, and they're it's a very simple explanation. That's when price action trends from one edge of the cloud to the other, whether it be a bearish edge-to-edge trade or it be a bullish edge-to-edge trade. And you can see how beautifully price was respected and rejected at the top of that cloud, and how beautifully it acted as a level of support and again as a level of resistance from this edge-to-edge trade example. So let's go through and have a look at an edge-to-edge trade. So an edge-to-edge trade simply just means we are broken into the cloud, and when we confidently break in one side of the cloud, we're looking for the other side of the cloud to act as the next sort of price target, if you will, if all things are continuing on in this sort of bullish environment. So how would we identify that? Well, pretty simply, once again, we had a bullish TK cross here. We had the angle of our base and conversion started trending upwards. We had a break inside the cloud. Our Chikou is now inside the cloud, and we had a bullish Kumo twist here. So a lot of indications here telling us that this price may continue upwards from one edge to the other edge of the cloud. Now, when you do get edge-to-edge trades, these levels here, being the flat levels of the cloud, are significant, particularly when they're flat like this. Well, I find that the flatter the angle of the cloud, the more it sort of acts as a little bit of a magnet for price action. And we can see how we gravitated towards this flat level. Do I have any sort of reason for that? No, I don't, but that's just from my observations of trading Ichimoku for the last few years. So really beautiful edge-to-edge trade there. We want to ensure that our conversion line stays above our baseline for this to happen. If we saw a bearish TK cross here, then I would be cautious about this gravitating towards the other side of the cloud. But because we had this divergence between the two, the blue remained above the red, it gave me confidence that we may have just a retest of this level before moving back up towards the other side of the cloud. Now, there's one thing that I want to talk about just quickly. And we can see here now we've got the beginnings of an edge-to-edge trade on the 1 day, but hang on, you want to be a little bit cautious of that. And we haven't had a bullish TK cross just yet, but we do have what's called a C clamp, which I'll talk to you about in just a moment. Now, when it comes to trading strategies for the cloud, there's one thing that I want to highlight. And while it doesn't always play out exactly as you would hope it would, one thing that I see more and more when price breaks into the cloud, and we've got a bullish scenario like what we do here, what I often find is that we have a break inside the cloud, and then immediately or very quick to, we will retest the bottom of the cloud. And if we have a nice buy up or a nice reaction from this Kumo, as we did here with this sort of little pin bar, yes, we retested it here, but that was a very bullish candle after that. I find that we tend to sort of break inside the cloud, retest the Kumo, and then we get our nice edge-to-edge trade. I don't find that we immediately break into the cloud and then bang, we hit edge-to-edge. It's not like that. There's always going to be a little bit of volatility, particularly when you see these wide clouds. When you see these very big fat clouds, it's indicating a little bit more volatility than what you would see in a very skinny cloud like this. So if we were to look at BTC now, where we are, we would, let's just play hypotheticals here. If we were in just a bullish scenario, I don't think we are, as I explained earlier before. So let's talk about this. If we were in if we had a nice big fat bullish cloud, this bearish twist weren't here. We had, so let's say for example, a TK cross down here. We would see something. Maybe we would go up. We would retest this flat part of the cloud. We would come back down, retest the bottom of the Kumo, maybe in this sort of region here, and then we may continue back up towards here, or we may aggressively find our way back up towards that sort of 11.6 area with a little bit of volatility in between. Every time that I see a sort of a flat level like this, and I guess maybe you would do something like that because of that. I would pay attention to that. I always still put a little bit of weight on flat areas of the cloud, even to the left of price action. Just because we are trending on this side of the cloud, that doesn't mean that these areas here are not still relevant. Any type of flat area or horizontal area of the cloud, whether it be to the left or to the right, I'm still paying attention to in terms of where we might find some volatility. Hence the reason why I was just saying a moment ago, we might see something like this. Bang, we come up, hit this level of resistance, come back down, hit this level of support. We may even do something like this, where we come up, we hit, we go bang, we hit here, we go bang, we hit, this becomes support, up like that. We may have some sort of trending price action like that, which would be like this sort of little wave pattern. But always pay attention to what the Kumo is doing to the left. Don't always just put all your attention to what's going on the right. So that would be a really, really beautiful edge-to-edge trade. And I want to find a better example of this. This is pretty good. We've entered the cloud. We've very close to retested the bottom of the cloud. We've had this little pin bar here and this buy up from this level. We've still got divergence between our base and conversion lines. So let's check the boxes here on the 4 hour. Bullish TK cross, check, because it's occurred below the cloud. So it's not we don't put all our weight on it. It would be a much more bullish signal if we had a cross inside the cloud. I'll create a guide for this because I know I'm overwhelming you with a lot of information. So let's just look at what's immediately in front of us. Bullish TK cross, bullish Kumo twist, divergence between. We've come up, we've retested our baseline. We're now inside the cloud. We've had a little bit of a close to a retest at the bottom of the Kumo. We've made our way up. We've come back down, retested this level, the flat level of the cloud, although I would still be cautious of looking what happened at this very bottom level of the cloud. And then we've continued our nice run up, making for this edge to edge trade. It doesn't happen in one foul swoop. There's always going to be a little bit of volatility in normal conditions inside the cloud. If we have some sort of bullish parabolic run, yeah, sure. You can go from one edge of the cloud to the other edge of the cloud very, very quick, where you would often see in lower liquidity coins like Ion or Atom or whatever shit coins are popular at the moment. So that's trading alts. You see that a little bit more regularly. But now, because we've also broken inside the cloud, that's a pretty bullish scenario as well. Yes, we've broken outside of the cloud here on the 4 hour, but we're now potentially expecting a little bit of volatility around this area. I'll show you on a chart that I have. And you'll probably go, holy shit. I've got a lot of different charts. Yeah, so here we go. So the reason why even though I'm looking at previous price action from here as well, but also you can see how this 10-8 area aligns quite well with this flat area of the Kumo to the left. Yes, there's also some cloud resistance here at that sort of 11K or that 10-9 level as well. So we've seen this really, really beautiful edge-to-edge trade and this bullish condition here on the 4 hour. But the real test will be if we can break this level here and if our Chikou can also break the top of that. So that's why I spoke about it tonight in our update, where you might see something like, we might go up, retest, come back down, retest, come back down again. And then if we do head up back towards this area, what I really want to see is our Chikou breaking outside of the cloud to confirm overall bullish action on this particular trade. I'll clear that shit up later. All right, edge-to-edge trades. Now, let's look at the crypto settings, and this is why Unimoku is, in my opinion, the best Ichimoku indicator. Yeah, I'm biased, but this indicator is so good. Let's go have a look at some of the settings. So you'll notice in this, there's 4 different settings, and this is what I love about this indicator. We've got 4 different settings. The only ones that I pay attention to 99% of the time are the crypto settings and the standard settings. Now, if you've got an eagle eye, you'll notice that these crypto settings are double the standard settings, and this is double the standards, double the standard settings closely as well, and these are half of the regular crypto settings. So let's just look at these 2 first. Standard settings. This is what you will find in Forex, traditional markets. I use these settings, the 926 settings, to help me gauge more immediate trend levels. So the crypto settings are double the traditional settings, and I'll get to why I like them in just a moment. So this is giving you more immediate data. So if you are looking for a more immediate idea of, are we bullish, are we bearish, have we broken outside of the cloud, more so in my case, 926, 52, 26 being the standard settings, STD on this one are going to give you more immediate reactive price data. So if you had just had this setting on here, you would know. Let's put a line there. You would know that we are starting to actually. Let's put it on the TK cross. So our TK cross occurred here. So that was where our TK cross occurred on here. Now let's use this and see if I'm made to look like a mug, or if this is okay. Cool. So there we go. So there's our TK cross using our crypto settings. And how far apart was that? That was 3 days apart. So while we ultimately we had this bullish move, we knew of this bullish move, or the first part of a bullish move upcoming 4 days or 3 days before the crypto settings told us what was occurring. And then we could obviously use our conversion lines as levels of support here. But let's just so what I like to do is I like to look at the standard settings as more immediate levels of for entries. So if I see that we've got a bullish DK cross, and I see that we've come up, we've respected our baseline, we're inside the cloud, we've got a bullish TK cross. That's giving me more immediate data for an entry than what the crypto settings are, which are, as I said, lagging by 3 days. We haven't even got a bullish Kumo twist here. So if we were looking at this, the crypto settings alone, we're still bearish. Whereas here we had more immediate data telling us with further confirmations that we were bullish at this point here. We were bullish at this point here, and we were bullish at this cloud support or this edge-to-edge trade, and we've still got divergence between our base and our conversion lines. Crypto settings, it hasn't told us shit. It's told us that we've got a bullish TK cross here, and that we're still bearish. And we didn't even have really any sort of clear convergence between our base or our conversion and baseline. So it tells us very, very little data for entries. However, when it comes to altcoins, for example, I find that the double crypto settings help to give me better levels of let's say, exit targets. So that's our horizontal ray for our. So what we would have done is maybe we would have looked at a potential entry here. And at this stage, we don't have any sort of exit signal here, bar the left. Okay, obviously we do, because we're looking here. This is why we don't discount previous TA or discount levels of support or resistance, for example. But this is using just our Ichimoku alone. So we could put a little bit of weight on our horizontal part of our cloud, or we've made an entry here. Where can I potentially look as a level to exit out or to look as a level of resistance? Well, that's when I swap it over to the crypto settings, and this is giving me pretty damn accurate level of resistance. So you may have used that previous structure here to the left, and then you've also got cloud resistance here on your Ichi settings. So that's where I like to use 926 as an entry signal. I like to use double Ichi, double standard settings as a means to exit. Now, I don't use that on BTC a ton of the time, but certainly when it comes to alts, I use that setup a lot. So if we use the daily, so we had a bearish TK cross here. We were noticing a little bit of divergence, but we started to converge quite quickly. And Steamroller was not in any sort of bullish scenario at that point here. And we would maybe look to use this as a level of support here. So that's using the standard settings. Now, where would we have been? Oh, and we also got this as well. So that's bearish, and Steamroller telling us fucking way back here that we were bearish. So multiple levels of bearish scenarios. Now let's switch it over to. We really had nothing. When was there any sort of, we had a bullish TK cross here. So yeah, maybe the entry would have been good there if we were just using that as a level of entry. Let's have a look and see where standard would have given it to us. Way back here, days beforehand. But however, we may have looked to have used the crypto settings to sort of give us an overall look at whether we would use this as a level of support, or if we had a serious break inside the cloud, that this level may be worth engaging or looking at. So because we didn't have a significant break inside the cloud, I would maybe use as an indicator that, hey, well, there may be some sort of level of resistance, support here rather, and I'm looking at this as a level of resistance at the top of the cloud, and that's my exit. So you can sort of see how using them in unison with one another gives you entry and exit signals, and that's how I like to sort of play them. In terms of the rest of this, I don't want to keep going on too much because I know I've taken up a lot of your time already, but That's sort of the basics of how I use Ichimoku. And if you're trading like a DeFi coin, Fergs, I'm looking at you, or if you're trading some sort of coin with very limited history, then that's where this half setting for crypto comes in, because it gives us a little bit more, it pulls more from the data that's available from a shorter time span than what the double crypto settings are doing. So I don't use this standard 18104 really at all, particularly when I'm looking at altcoins. I'm just using it as crypto 10, 30, 60, and that will give you more immediate data of trend. Whereas, what is a very low? I'll give you an example real quick. 1 BTC. Oh, look at that. Respected. I don't know when I looked at that. So let's have a look at what's a very new coin. Here we go. So this is a pretty sort of new coin, but you can see how the Kumo is kind of cut off there. It means it's not giving us too much data. If we switch that to the half settings, we get a lot more data that's pulled, and that's probably a few more weeks worth of data that's pulled. So if you've got a very early coin or a coin with very limited history, that's where I'm using the 10 setting as opposed to the double crypto setting. So double standard settings means really double the length of time before you get any sort of indication, but also gives you a better exit signals, whereas the standard settings give you better entry signals, in my opinion, when trading crypto. But when it comes to Forex, standard settings all the way. It will give you the best bang for buck. Don't even look at the crypto settings when you're trading Forex. So that's it. I hope you enjoyed that. I know I can kind of ramble a little bit, and it's 9 o'clock. Thank you for anyone who did stay on. That's how I use it. If you'd like to sort of see a little bit more of an advanced course on how exactly I use entries and exits along with MAs and our Unicon indicator, you can go and look at that in my altcoin trading strategy on YouTube. And basically what I would use, just if we go back very, very quickly. Goodness me, it's a lot of data on here, isn't there? Jesus. All right, just very, very quickly, you know how I would use this. I use this in conjunction with our EMA fans. I find that it works very, very well with our EMA fans for levels of support or resistance. And really, the strength in this, I find, is also using Fibonacci, and you will see how the Kumo acts as a dynamic 50 Fibonacci, depending on whether we are looking for levels of support or levels of resistance. You will see you're always going to get a very close to cloud resistance using Fibonacci, because your Kumo is really a dynamic sort of 50 Fibonacci. Great for using it in terms of looking for levels of support or looking for levels of resistance when used with an EMA fan, or of course with one of our tools like Unicon, where you can really beautifully see. You get an EMA cross on a TK cross. That's money in the bank. So hope you enjoyed that. If you have any questions, you can come over to Discord, unitytradinggroup.com. Just type in Ichimoku Cloud Unity Trading Group, and you'll see a lot more structured video from us. And all the explanations of everything that I've spoken about tonight broken down in really, really easy to understand levels. So I know Ichimoku can look very overwhelming and confusing, but don't let it overwhelm and confuse you. You can get your premium trade pack that'll give you all the signals, TK crosses, bullish crosses, all that sort of stuff. And really make a meal out of Ichimoku, because it is well worth your time.